Joining us now is Mr. Robert Linton. He's a senior portfolio manager with the Strattners Hedge Fund. Robert, welcome back to the program.
Hi, Don. Thanks for having me.
Well, Robert, I want to talk to you about company financing, which is what you folks do. I know that it gets difficult for some small companies to find financing. What are you looking for in company deals these days?
Well, what we've been working on a lot lately is we're doing a lot of alternative financing for companies that maybe have done like an IPO with a SPAC, and these SPACs these days are getting quite a few redemptions. So we'll do like a follow-on investment to cover those pullouts that they get. So the financing, it's best when a company has enough liquidity that it can absorb the investments that are going into the company. And that's basically what's probably the most important part of investing in these smaller cap companies. Most of the deals we're doing now are NASDAQ listed. They're in the medium and below to the small and nano size. But the same principle applies in the OTC markets. It's because they have better liquidity, and that's basically what the main objective is for investing in these companies today.
I know you talk to a lot of company CEOs. What are they telling you is the biggest challenges they're facing?
Well, a lot of them are they'd like to get debt financing, but most of the traditional debt financing, it's great in principle, but usually they have quite onerous clauses that if the debt is not serviced and it defaults, it can cause them to get a conversion that isn't really favorable to the company. So that's kind of what we've tailored our financing towards. In some cases, we have companies come to us that use our financing to pay off other debt financing they've had in place. We also use it as an instrument it's almost like an insurance. So we set up a financing for them. And if for some reason they do get a debt financing that they like, that gives them a lot of cash up front, they have the insurance of being able to pay back that debt if their cash flow doesn't allow them to service it the way that they would like to. But so that's kind of the where we're fitting into this new model that's happening.
Well, you and I have been at this for quite a while. We've seen more companies convertible debt financing ruin the company stock.
Yeah, I mean, it can, because sometimes things just don't work out the way you like. That's why, like with these SPAC companies that we're working with, actually the people that that put the SPACs together now are working with us because they want us to have that financing available behind them, just in case redemptions do happen. And a lot of these companies are starting off at $10, and if you look at the charts over the last 2 years, most companies that started off at $10 can be $3 or $1, even below $1. And it's not necessarily the company's fault. It's just the entire marketplace across the board is sloped downward, and eventually it will recover. But the companies still need to be able to operate. But the initial shareholders oftentimes don't want to have the company sign a deal that's going to dilute their company at $1 a share when they were in it at $10 a share. So they'd like it to recover. And that kind of our model works with them to help get back to that position. And if they do need money, to not have those types of onerous terms against them.
What's the best advice you can give a company looking for financing right now?
I would say hedge whatever type of financing you're doing. Make sure that it doesn't have a toxic conversion clauses within it. It's kind of deep into the contracts. If you pay back the debt as the terms are, it's great. But oftentimes the companies are really hoping you don't pay it back, because they make a lot more money by making a conversion, and then that conversion it's incentivized by that lender to get the price lower upon every conversion, so they make more money. So I would say that's the most important thing to look at when you're going to do some type of debt financing.
If people want to pick your brain personally, how can they get in touch with you?
Well, you can reach me. You can go to the website, strattners.com. My email address directly is robert.linton@strattners.com. And we're happy to talk with companies and see if we can provide a solution for them and work with them.
Strattners Hedge Fund, Robert Linton, thanks so much for joining us. Great advice.
Always a pleasure, Don. Thanks for having me.